morning, Wall Street got a degree of relief at the end of last week as relatively tame US inflation data spurred bigger bets on the US Federal Reserve's interest rate cuts, with bond yields falling. While most stocks gained, weakness in tech giants kept a lid on the market. US two-year Treasury yields dropped to their lowest level since 2022 as traders priced in higher chances the Fed will slash rates more than twice this year. About 370 shares in the S&P 500 index rose, but the gauge closed little changed. An index of megacaps lost 1.1%. The Russell 2000 index of small firms climbed 1.2%. Bitcoin and gold both jumped. At the close of trade on Wall Street on Friday, the Dow Jones index rose by 49 points or 0.1%. The S&P 500 index gained just 3 points or 0.1%, and the Nasdaq index shed 50.5 points or 0.2%. The S&P 500 index closed slightly higher, supported by cooling US inflation data, but the Nasdaq index ended lower as heavyweight technology shares lost ground on nagging fears of disruption by artificial intelligence. The S&P 500 Information Technology and Communication Services sub-index fell between 0.5% and 0.8% as investors were jittery ahead of Monday's holiday for US President's Day. Mega cap growth stocks were weak, with Nvidia and Apple providing the biggest drags to the S&P 500, both down 2.2%. Networking equipment provider Arista Networks gained 4.8% during the session after forecasting annual revenue above expectations. Shares of Nvidia and Advanced Micro Devices moved in opposite directions after the CEO of Arista, Jayshree Ullal, told investors that her company is seeing some deployment shifts to AMD, whose shares gained close to 1%. Shares of the chip-making equipment firm Applied Materials jumped 8.1% after it forecast second quarter revenue and profit above Wall Street expectations. Defensive utilities ended up 2.7% and real estate added 1.5%, making them the top gainers among the S&P 500's 11 major industry indexes. Shares of crypto company Coinbase Global soared 16.5% to the top of the S&P 500 index. Coinbase said that its total trading volume in 2025 hit $5.2 trillion US, up 156% year over year. The firm also reported that its subscription and services revenue rose to $2.8 billion US in 2025, up from $2.3 billion US in the prior year. Shares of alcohol producer and marketer Constellation Brands slid 8% to the bottom of the S&P 500 after the company announced Nicholas Fink will replace Bill Newlands as CEO on April 13. Shares of Expedia dropped 6.4% after the online travel agency identified emerging AI-powered platforms in its earnings presentation as a potential risk, even as it posted fourth quarter results that beat expectations. The Dow Jones index was boosted by Nike, United Health and Walt Disney, whose shares rose over 3% each. For the week, the S&P 500 fell 1.4%, the Nasdaq declined 2.1%, and the Dow fell 1.2% for their biggest weekly losses since November last year. US government bond yields dropped on Friday as cooler than expected US inflation data for January bolstered bets that the US Federal Reserve will deliver at least 2 rate cuts this year. US inflation was fairly mild at the start of the year, with the headline consumer price index or CPI increasing 0.2% in January, the smallest gain since July last year, restrained by lower energy costs. The annual growth rate eased to 2.4% in January from 2.7% in December, below market expectations for 2.5%. An underlying metric known as the core CPI, which excludes food and energy, advanced as expected from a month earlier. Core consumer prices lifted 0.3% in January, with the annual growth rate dipping to 2.5% from December's 2.6%. The core CPI rose from a year ago by the least since 2021. The slight pickup in underlying inflation from a month earlier reflected higher prices for airline fares, personal care, recreation goods, medical care and communication. Traders reacted by pricing in roughly 63 basis points of monetary policy easing by year-end, equivalent to 2 quarter-point cuts and about half of a third, up from 58 basis points on Thursday. They continue to fully price in a Fed rate cut in July, as well as a strong likelihood of a move in June. On Friday, the US 10-year Treasury yield fell by 6 points to 4.05%, and the US 2-year Treasury yield also dipped 6 points to 3.41%. On a weekly basis, 10-year yields posted their biggest decline since mid-November, November, down 18 points, while two-year yields slid 10 points, the largest drop in 3 months. European share markets ended in mixed territory on Friday as concerns about potential AI-driven disruptions kept investors cautious. The Pan-European Stock 600 index closed 0.1% lower. However, it capped a turbulent week with a marginal gain of 0.1%. The defence sector led gains on Friday, rising 3.3%. Aerospace group Safran jumped 8.3% to a record high after forecasting increased revenue and earnings for 2026. Bank stocks slid 2.8% on Friday and 5.4% over the week, posting the sharpest weekly fall in over 10 months. In London, the UK FTSE 100 index gained 0.4% on Friday and ended up 0.7% for the week. Defence stocks got a lift, adding 2% as investors assessed a report that British Prime Minister Keir Starmer plans to push a multinational defence initiative at the Munich Security Conference. On global commodity markets, oil prices settled higher on Friday after data showed an overall slowdown in US inflation, helping offset supply concerns as OPEC Plus is leaning towards a resumption in production increases. The Brent crude price gained 0.3% to $67.75 a barrel, and the US NYMEX crude price inched up 0.1% to $62.89 a barrel. But Brent fell 0.4% for the week, while the NYMEX lost 1%. Gold futures settled 2% higher on Friday at $5,046.30 an ounce, as weaker than expected US inflation data reignited hopes for Fed rate cuts this year. Bullion was up 1.3% for the week. Spot silver climbed 3.4% to $77.70 per ounce on Friday, snapping back from an 11% decline in the previous session. Copper futures settled up 0.4%, but aluminium futures shed 0.4% following a report the US may trim some import tariffs. For the week, copper slid 1.2% on profit taking, while aluminium rose by 0.4%. Iron ore futures dipped 0.7% to $99.66 a tonne on Friday, as increasing Chinese stockpiles and higher than expected output from Brazilian miner Vale added to concerns about oversupply. The futures contract slipped 0.4% over the week ahead of the Lunar New Year holiday in China this coming week. Australian shares are poised to rebound on Monday following Friday's 1.4% sell-off on the S&P ASX 200 index, supported by rising gold and oil prices. The ASX 200 futures are pointing up by 51 points or 0.6% to begin the new week after the benchmark gained 2.4% last week, logging its best week since April last year. Australia's share market could hit a record high this week as the reporting season peaks, with 80 companies set to release their results over the week. On Monday, around 25 ASX-listed companies issue earnings results, including A2 Milk, Ansell, Bendigo and Adelaide Bank, BlueScope Steel, GPT Group, JB Hi-Fi, New Hope, Stockland and Treasury Wine Estates. New Zealand's A2 Milk, dual-listed on the ASX and NZX, reported a 9.4% rise in half-year profit on Monday morning, supported by robust performance of its infant milk formula product segment in its key China market. The dairy producer posted net profit after tax attributable of 112.1 million New Zealand dollars for the half year ended December 31, compared with 91.7 million New Zealand dollars a year ago. That beat the consensus estimate of 104 million New Zealand dollars. In the data week ahead, the Reserve Bank of Australia will release its latest monetary policy meeting minutes on Tuesday. On Wednesday, there's the fourth quarter wage price index. January's jobs report is set for Thursday for Australia as well. US financial markets are closed on Monday in observance of Washington's birthday or President's Day. The US dollar was mostly flat against peer currencies on Friday after data showed a less than expected increase in inflation in January, suggesting the US central bank could continue to hold rates steady in the near term. The Australian dollar, the top performing major currency of 2026 so far, after soaring in recent weeks on hawkish RBA commentary, rose from 70.46 US cents to 70.85 US cents on Friday and was near 70.65 US cents an early trade on Monday. The Aussie dollar has gained nearly 1% over the course of last week. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in. Have a great day and week ahead.